It is a unique privilege when we meet people like Professor Robert Eccles, who's come here all the way from Boston, and what a history, what an academic sort of pedigree that he has. But he's gone beyond. He has now moved into bringing about sustainability and reinventing finance as we know it, and really defining the way forward. So, Professor, delighted to have you here.
Nice to be here.
And a lovely,
nice to be here.
Beautiful, sunny
fabulous day. Fabulous day.
And we'll like to have a nice, warm welcome to you too.
Well, thank you. This beats January in Boston.
Absolutely.
I can tell you that.
Bob, as you know, that Mad Talks is a storytelling platform, as we have explained, when we tell stories about the most amazing people in the world, and hopefully you'll be one of our mad gurus who goes out there. That's your new title.
Thank you.
And as a mad guru and as a person who's seen a lot in the world, where did your story start? What is your original story? Where you come from, and a little flavor of what excites you and gets you going?
Oh gosh. So the really short version of a very long story is I was born in Denver, Colorado, and I went east to go to college to MIT, and I wanted to be a pure mathematician. And I wasn't smart enough, so I had to find a different line of work, and I got a PhD at Harvard in sociology. And then I went to Harvard Business School and taught there for many years.
That's the less smart version of you?
That's the less smart version of me, yeah. Yeah, that's the part that doesn't make the mad guru cut off probably, right? And I always kind of had this institutional perspective. Studied investment banking, about kind of how the industry works, got interested in corporate reporting. And I'd say within the past 5 or 6 years, all these things kind of converged in an interest in sustainability and sustainable development. So at 65 years old, if I had to say, kind of what am I? I'm a capital market activist. That's how I see myself.
So as a capital market activist now, how are you merging sustainability into what is a very brutal financial numbers-based world?
So I think these things aren't incompatible at all. If you think about kind of where the world is going, environmental issues, social issues, the big asset owners, the big asset managers, for them to continue to deliver the economic returns that they need to for their clients and their beneficiaries, they can't avoid global issues like climate change and water scarcity and inequality. And so it's really in their own economic self-interest to learn how to factor these things into account in their investment decisions, both from a risk point of view, the environmental, social, and governance, ESG from a risk point of view, and from an opportunity point of view, because those companies that are managing those well and see the opportunities that those create, they'll do better.
You mentioned the other day that accounting standards address several issues, but issues like capital asset, goodwill in terms of brand and various other elements are not being recorded there, and sustainability for that matter.
Right.
How do you see that shifting and changing as you go forward?
So if you step back and you think about accounting standards, we didn't always have those. In the United States. They came with the creation of the SEC. They were designed to account for financial capital and manufactured capital, hard assets that go on a company's balance sheet. I was involved in starting a group. Brainchild was a woman named Jean Rogers in San Francisco, called the Sustainability Accounting Standards Board, SASB. I was the founding chairman. Mike Bloomberg is the current chairman. In simple terms, what we're trying to do at SASB is to create standards for non-financial information, environmental, social, and governance, so that we have the same quality of data, the same quality of reporting, and once we have that, and it covers not just financial and manufactured capital, but natural capital, human capital, social and relationship and intellectual capital, we can take a more holistic view of investment decisions as companies and investors through something called integrated reporting to support integrated thinking.
So it's integrated reporting as opposed to what I thought possibly that we'll have two sets of books. We'll have the financial books and we'll have the sustainability books and then sort of merge them together at some point, but essentially they are independent. Is that not how it is?
Today, that certainly is how it is.
Okay.
And when you think about it, and I don't want to get into a lot of technical detail, but these reports are for different audiences. The financial reports are for investors, and the sustainability reports are for other stakeholders. And if we got away from the term sustainability and we thought about it more in terms of materiality, so what those ESG issues are industry specific. Access to medicine, safety in clinical trials are material for a pharmaceutical company, but they aren't for a bank. Those material issues, it's a relatively small number out of the whole list, those would be what goes into an integrated report and how they're related to financial performance. There should be still sustainability reporting to other stakeholders who have a legitimate interest and the company needs to respond to it, but they shouldn't be allocating the same kind of resources to those issues as they are to the material issues that affect their ability to create value over the long term. And I'd like to say the long term is important. We need to think about this in a more long-term way.
We're a purpose-driven company, and to me, purpose is an integral part of value creation, because that's the catalyst, the inner energy that drives a corporation. Do you somehow find companies that are purpose-driven and therefore more successful, or sustainability-driven and therefore more successful, and is that part of how you see the world?
So, good question. I would say the purpose-driven would be more closely related to financial performance than, quote, the sustainability. Mm-hmm. And I would say that purpose-driven organizations are those that either consciously or intuitively have understood which issues are most important, which stakeholders are most important, and they've got this broader view and they've got a longer-term view, as opposed to this obsessive focus on delivering short-term earnings for only a small class of shareholders. I mean, they may have the largest shares, but not all shareholders are looking to get short-term returns. Pension funds aren't, sovereign wealth funds aren't.
One of the things I see in terms of an inflection point in your business is the ability to capture huge amounts of data. Is that one of the key shifts that have taken place and giving you the empowerment and enabling you to be able to do a lot of the stuff that you're doing?
Yeah, I think this whole big data trend, which people talk about a lot, and it's sometimes more of a buzzword than anything else, makes a huge difference. I'm chairman of a company called Arabesque Partners. It's an asset manager. We're the world's first ESG Quant Fund. We process 100 billion data points a night. So we have a very sophisticated quantitative model, financial information, earnings pressure, ESG information, UN Global Compact compliance, market momentum, and it's our ability to process huge amounts of data that would not have been available 10 years ago that enable us to do what we do.
Artificial intelligence and cognitive computing in terms of robotics and automation is growing and making and changing the world as we know it. So IBM Watson claims that they can now democratize and commoditize expertise like the internet did democratize information. So they're saying they can do 90% of what the left side of the brain can do. So we're left with about 10% of our brain. My thesis is that as we go forward and as this becomes democratized, the most important thing that starts coming is our humanity, our sustainability, our purpose, our ingenuity, our intuition, love, affection, art, culture, the softer side of relationships, collaboration. Have you factored these kinds of new changes that are taking place in your thesis?
Wow. You didn't warn me about this one, Tarek. This has taken me outside, my comfort zone, but it's an excellent question.
Thank you.
Certainly in terms of what we do at Arabesque, I wouldn't pretend to say that we've kind of got to that elevated level that you're describing, but let me try and reflect on it. So the short version of history could be that we moved from agriculture and we had manufacturing. Now the robots are taking those jobs, and people that are writing the code to create the robots that are taking away the manufacturing jobs, the code's going to write itself, which is what you're talking about, and so this shift has to take place. So then what happens? Here's what I think the challenge is. Right now, kind of the way the world is today, we find meaning from work. I mean, we certainly have meaning in our relationships, but to have a good job, a meaningful job, something that engages you, I don't know where these other jobs are going to come from. Maybe there's an economic model where the percent of employment or the number of people that are employed is less. What you're talking about is that if people, let's say it's just technology making them more efficient and the cognitive processing is done in some other way, then the challenge will be finding meaning, and how people find that and how they find that in relationships. Some people say, well, everybody's going to have to become a painter or a poet. Well, I don't think that that's practical, and I don't think that's going to happen. What I don't think machines will ever be able to do is copy empathy.
Indeed.
Right?
Yeah.
And that's what we need to do. So I think if we can leverage technology, but then people learn how to be more open, more understanding. I mean, when you kind of look at what's going on in the world, it's divisive in so many ways along social dimensions and ideological dimensions and political dimensions, and our success as a society is as much on solving those as it is in dealing with new technologies and things like climate change.
I think empathy is one of the key words that we look at as we go forward, because robots will not be able to do that, and that is what differentiates humans, empathy and imagination, and I think that's where a lot of our future jobs and opportunities are going to exist. So let's see how it evolves. A couple of final questions. You measure, you have something called S-ray.
Yes.
And can you explain that to us? Because I think, to me, it was a wonderful way to describe something where you focused on data rather than an X-ray. You have an S-ray.
Right. Well, we obviously are trying to leverage off of the X-ray of the human body, and so the S-ray is to do an X-ray of companies.
Yeah.
This is something that Arabesque is doing. In simple terms, we've identified the largest 5,000 companies in the world, and there are 10 principles in the UN Global Compact that come in 4 categories: labor rights, human rights, the environment, and anti-corruption. So again, using big data, using lots of different data sources, what we've done is to create a scale from 0 to 100 of what the company's global compact score is. To what extent are they adhering to these principles? That takes us back to the earlier part of our conversation. To the extent that big companies are adhering to these principles, the world is better. If they aren't, it's worse. We have a score on that. We have an overall ESG score based on our proprietary methodology with looking at the material issues per sector. We'll have an ESG score from 0 to 100. Then we'll have the capability that you can do screening to create portfolios to look at companies by size, by sector, to screen out sectors. And so why are we doing this? Because this is going to be free. Yeah. This is going to be in the public domain. And we're an asset manager. Why would we do this? Well, we're an asset manager that wants to change the world. We think ESG Quant will change the world. So imagine anybody, anywhere with an internet connection, that's an employee, that's a supplier, that's a customer, that's an investor, can go and find out how, on a list of 5,000 companies, how are they doing? Yeah. And I think this can create great opportunities to incent the good ones to get better and the bad ones to try and raise themselves up. And obviously, since it's going to be a ranking, but you want to have kind of a rising tide lift all the ships.
You've been described as the Tesla in finance. Could you give us your version of it, and why should it be the Arabesque of automobiles?
So, good question. So Tesla is a disruptive technology in the automotive industry. The business model is very interesting. You basically can refuel for free. You go around to where there's the little Tesla power outlets and stuff. It's clean, right? And it is a completely different business model that will change the automotive industry. We think of ourselves, and it was, I think, a nomenclature maybe given to us by Thomson Reuters when they were interviewing our founder and CEO, Omar Salim. We see ourselves as disrupting financial services. The fees are too high. We're not a hedge fund. In U.S. parlance, we're a mutual fund. So there's been this distinction you talked about in the beginning. There's the smart guys, the quants that do the financial stuff, and the nice people that do ESG or responsible investing, and they're giving up returns. We bring them together and get both. People want to invest their money to get returns and to do good at the same time. And the companies that are doing both are the ones to invest in. We select those. And So we've created a business model so that this can be available to people all over the world. And we think that that's disruptive because this artificial dividing line between financial returns and ESG is going to go away. Clearly, we want credit for being the world's first ESG Quant Fund, and we're going to raise assets on this basis. And that will be one marker of success. But, to be perfectly honest, another marker of success is going to be the extent to which ESG has gone mainstream, ESG Quant has gone mainstream. I think in that sense we will have changed the world. So that's why we're the Tesla of finance.
What an amazing answer. My final question, if you would indulge me.
Sure.
Imagine today is your 90th birthday.
Wow.
We've come here to celebrate your 90th birthday. What are we celebrating? What are we saying, what are we clapping about? What are we looking up to you for the next 25, 30 years of your life?
Oh gosh, that's another unanticipated question you didn't warn me about. So let me give you sort of flip answer, and then I'll give you a more serious answer. The flip answer is that I started lifting weights 5 years ago. And I can squat 260 pounds and I can deadlift 370 pounds.
I wish I could do that.
And my goal is, before I'm 90, to be able to squat 300 pounds and deadlift 400 pounds.
Okay.
I won't be doing that at 90. But if when we were celebrating my 90th birthday, we could say at one point, Bob, got that done,
Yeah.
that would be something to celebrate. I think more seriously, if it was seen that through the work that I've been doing, which is, much of it's in the trenches, it's behind the scenes, it's standards for non-financial information, it's materiality, it's fiduciary duty. If this work was seen as contributing, and being the first chairman of SASB and Arabesque Partners is seen as contributing to this trend which exists, and which is accelerating, if the world saw and I felt that I had some small role in that as a capital market activist, I would be very happy.
So this is how you make a difference, which is our acronym for MAD.
Yeah, I'll make a difference. You never told me the acronym. Now I get it.
Now you get it.
Oh, so you spring that on me at the end. Now I know.
Yeah, so,
okay.
So you're making a difference. And
well, I'm trying.
No, I'm sure you are. And it's a real pleasure, sir.
My pleasure. Thank you very much.